Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this video on the New Zealand Canadian dollar trade setup, right? So potentially we've got a short opportunity occurring right now, and yeah, I just wanted to go through really some of the I suppose my thoughts and some of my approaches and what I think about when I'm looking to take this level, and why really we should look to potentially take this level. So first things first is that we are at a level of supply, right? So supply is value, right? Potential bargain area, and I know this for a fact because in July, especially July the 25th this year, the prices and the exchange rate went lower, right? So that was a bargain for the Canadian dollar. If you're looking to buy the Canadian dollar over the New Zealand dollar, then you have to press sell on your broker, and we know this as a bargain area because we can see that prices fell away from here. Buyers were buying up the Canadian dollar, and that's where it started. That was the absolute cheap area. So as prices come back into this area of supply, is this going to be an area where we should see some price activity from a value perspective? Is the Canadian dollar a buy right around here? Now, I tend to do some fundamental analysis on top of the technicals, but I'm going to be talking about really from the fundamental perspective. One of the differences between the Canadian dollar and the New Zealand dollar is really interest rates. So at this price range, or I think it was somewhere within this day anyway, the Canadian dollar and the Bank of Canada raised interest rates, which is usually positive for a currency. And as you can see, price did react, but since the 24th of October, we've seen prices go the opposite direction. Now, price doesn't always reflect value, right? And value doesn't always reflect in the price. And so what we have here, if prices are down here from an interest rate perspective, right, and they've supposedly tried to strengthen their currency, and prices are up here, then this is seen as a bargain area, right? We are above where they where they did raise interest rates. So I'm all for buying the Canadian dollar right around these levels, or even if it means slightly higher, right, especially around this 0.900 round number. So from a value perspective, I know in the past, right, this year, that this was a cheap area for the Canadian dollar, and potentially it should be, or it could be another cheap area right here. So what else do we need to really think about outside of value, right, and interest rates, right? So we're looking at this from a technical perspective, right, technical analysis, and really trying to look at the motives as behind why traders are going to be entering sell orders here, because we need to ask the question of why is there going to be more supply in this area than demand, or why is there going to be more demand than supply, right, from a technical analysis perspective. So is our price going to go higher, or price going to go lower, right? So what kind of orders, supply orders, are going to be in this area? So first things first, we need to look at and see where other traders are potentially, or why other traders are going to be potentially trading in this area. And traders generally tend to trade what? Support and resistance, right? So let's have a look at support and resistance within this area, right? And why traders are going to be looking at this area to enter new trades. Let's keep going back, and we can see that this has been an area, right? This round number has been an area of support and resistance way back 2013, right? So we've got some support there, a bit of support, resistance, support. Pretty easy to see and pretty obvious. Resistance, bit of resistance at the bottom, resistance, bit of support, right? So this has been historically a level where other traders are going to be looking at, right? This area right here. So we're going to have traders who are looking to enter new positions short, which is what I call willing supply, right? So people are willing to enter if they see the right kind of, you know, price action. So whether it be pin bars, engulfings, you know, bearish, bullish flag patterns, etc., right? This whole area here potentially, you know, in alignment with support and resistance and value supply, right? We should see some willing supply come in. What else do we have? We have forced supply. So forced supply are from traders who need to take profit, right? So let's say, for example, a trader would have bought from, let's say, for example, way down here, right? Way down in this demand zone here. They're looking to take profit at a problematic area. And a problematic area would be an area of resistance. So if they've been riding this up, right, from here, or even from here, right, or any of these areas, where's the most logical area for traders to take profit? It's going to be somewhere around here, because they don't want to be left holding the bag, right? And what I mean by that is, if you're up right now and you haven't seen, for example, any kind of pullback into this level, so this level is literally, and this is just a tool what I use to measure whether prices have been back down to fair value. Fair value being the two black lines represent highs and lows. The highs and lows are either expensive or cheap levels. This level here, this golden level here, is what I would refer to as fair value, right? So the higher we go, we haven't had any kind of pullback, right, into fair value as we've made new highs. And at some point, we're going to have to, prices never go up forever, we tend to go down, back down to some sort of fair value range, right? Especially we've had, what is it, 2-3 weeks potentially of this big up move, right? So reversion, mean reversion back to fair value, right, is what I'm looking at as well, right? Traders are don't want to be necessarily the last ones to exit, right? If prices do pull back, because they don't know whether prices are going to make higher highs and higher lows. Best thing to do is what traders will do is look at their P&L, see that they're up, see that there's a trouble area of resistance ahead of them, and potentially take profit, right? So net we should do, from a value perspective and interest rates and supply, potential value in the past. Then we have the supply and demand equation, where we have forced and willing supply coming into the area. Who's buying here? Who's buying at the top? Why is there going to be more demand here, right? Who buys at highs? Again, if you are one of those traders that buy at highs, then this is not a high probability trade. That's not to say that prices can't continue to go higher, right? Prices can do whatever they want, but we're just managing the probabilities of a successful trade, and this looks like a potential, you know, setup that we could get involved in. Now, one of the things I also do as a Forex trader is look at other correlated markets. If you're looking at, you know, just currency pairs, then you are really looking kind of one-dimensionally at trading. Oil, US oil, right? Crude oil is highly correlated to the Canadian dollar. The Canadian dollar, its major export is oil. So the price of oil does affect the price of the Canadian dollar. Hence, you're seeing a big sell-off in crude, and you're seeing that basically happen on the Canadian dollar. Now, we have, we're pretty much at a demand zone here. Could we see some bullish price action? If we do see some bullish price action, then going back to the New Zealand CAD, we could see some bearish price action, right, at this level of supply in correlation with the demand zone in oil, and that would potentially help this trade as well. So what you want to do is, whenever looking at a currency pair, is look at any commodity. If it's a commodity currency like the Australian dollar as well, then you want to look at correlated markets and look at their levels and see whether there are buying potential. Now this could just be profit taking, we don't know, right? But if we do start to see a reaction, right, and real potential bargain hunting going on the US dollar, the US crude oil, right, then we should see some strength come back into the Canadian dollar. I'm not saying that this is a buy or a sell now, right, but we need to just be aware of what is happening around these levels and then take the trade if that's what we believe. Again, this is not financial advice. Please do your own research. This is just some of the things that I think about and the process that I go through when I look at taking a trade. If you're just taking a trade based off of technicals and not understanding who and why there should be more supply or demand in an area, then you are, I feel that you are at a definite disadvantage. So let me know your thoughts. You can feel free to comment, like, subscribe, share, and definitely take care until the next video.